comprehensive analysis of current cryptocurrency market trends. The cryptocurrency market is undergoing a period of transition marked by significant price swings, shifting sentiment, and increased institutional and regulatory activity. Bitcoin, the market's anchor, continues to fluctuate within a narrow range, while altcoins have begun to emerge as key players in the current cycle. Understanding these dynamics requires a combination of historical perspective, technical analysis, and forward-looking strategies, especially as we approach 2025, a year widely predicted to reshape the market landscape. Bitcoin's recent price action, between $96,000 and $107,000, highlights the asset's liquidity sensitivity near key psychological levels. Investors typically sell after Bitcoin breaks significant levels, creating short-term bearish pressure. Persistent inflation concerns, U.S. debt debates, and the Federal Reserve's volatile interest rate policies are important external factors influencing market sentiment. Steady institutional accumulation continues to offset retail-driven volatility, supporting Bitcoin's long-term trajectory. Despite short-term price corrections, Bitcoin's fundamentals remain strong. Indicators such as the Relative Strength Index, RSI, and high trading volume suggest that any pullback is likely to be a temporary consolidation within a broader bull cycle. Historically, Bitcoin dominance increases during the early stages of a bull market but declines as capital moves to altcoins, a phenomenon often referred to as alt season. Currently, Bitcoin dominance hovers around 50 to 55%, and early signs point to a potential decline as altcoins gain traction. As Bitcoin stabilizes, investors seek higher risk-reward ratios in altcoins. The growth of DeFi, scalability solutions, and blockchain applications drive capital towards specific altcoin sectors. The continued rotation into altcoins signals the maturation of the overall crypto market. Key players include Ethereum, ETH, as a leader in decentralized finance, DeFi, and smart contracts. Ethereum is poised to capitalize on its Layer 2 scaling solutions. ETH price forecast in 2025 ranges from $7,000 to $10,000. XRP Ripple's ecosystem, fueled by partnerships and innovations like stablecoin integration, sets XRP apart. Analysts predict an initial price range of $11 to $15, with long-term potential beyond $100. Cardano ADA. Known for its methodical development and academic rigor, Cardano remains a strong contender in the race for scalability and interoperability, with a price target of $7 to $9. Industry developments driving growth. Solutions like Ethereum's rollup technologies and other Layer 2 technologies aim to reduce network congestion, unlocking the potential for mass adoption. Integrating blockchain with immersive technologies positions projects like Wilder World as high-growth opportunities. Stablecoins are playing an increasingly important role in providing liquidity and cross-border transactions, with Ripple's stablecoin strategy enhancing the value proposition of XRP. While altcoins have high growth potential, the risks are also significant. Many altcoins have no intrinsic value, leading to price volatility and the potential for capital loss. The oversupply of altcoins, many of which have no clear utility, creates competition and reduces investor confidence in smaller projects. U.S. Bitcoin reserves and state-level initiatives. Speculation about the creation of a U.S. Bitcoin reserve underscores Bitcoin's growing role in the global financial system. If implemented, the policy would have profound implications. Integrating Bitcoin into the U.S. reserve strategy could cement the dollar's dominance in a world increasingly exploring alternatives to the dollar standard. An official announcement would likely spur a surge in Bitcoin adoption worldwide, with the price potentially reaching $300,000 by the end of 2025. In addition to federal action, individual states like Texas and Florida have begun discussing Bitcoin reserves. These local efforts signal the decentralized nature of cryptocurrency adoption in the United States. Even if federal policies lag, state-level momentum is likely to sustain the market's trajectory. The approval of Bitcoin exchange-traded funds, ETFs, is a significant moment for the market. Key trends include XRP and Solana ETF applications mark the next frontier, reflecting institutional interest in assets beyond Bitcoin. Ripple's introduction of a stablecoin increases liquidity and strengthens the XRP ecosystem, potentially accelerating the timeline for ETF approval. Regulatory clarity remains a double-edged sword for the crypto market. Regulatory frameworks can legitimize digital assets, encouraging broader adoption. Ambiguous or restrictive policies can stifle innovation and discourage institutional participation. SEC Chairman Gary Gensler's expected departure in early 2025 could signal a more crypto-friendly regulatory environment, providing a potential boost to the market's growth. Staking has emerged as a cornerstone strategy for crypto investors looking for passive income. Key developments include a Layer 2 solutions allow investors to earn returns on their Bitcoin holdings, creating new revenue streams without compromising asset custody. If Ripple introduces a staking mechanism, it could redefine passive income opportunities, competing with Ethereum and Cardano. Long-term wealth creation in crypto depends on disciplined accumulation and reinvestment. Strategies include reinvesting staking rewards. Compounding returns accelerates portfolios over time. Hodling high-utility assets. Prioritizing assets with strong fundamentals helps mitigate the risks associated with speculative investments. 2025 predictions. Dual scenario sustainable growth without U.S. reserves. In the absence of a U.S. Bitcoin reserve announcement, Bitcoin is likely to reach $200,000 to $250,000 by the end of 2025. This growth will be driven by institutional demand driven by ETFs, global adoption trends, supply dynamics decline. If the U.S. officially adopts Bitcoin as a reserve asset, the market could enter an unprecedented bull run. Analysts predict a Bitcoin price potential to exceed $300,000 by 2025, with a long-term forecast of $1 million. The increased confidence in the crypto market will drive altcoin valuations to record highs, especially for assets like Ethereum and XRP. Emotional resilience, the key to success in volatile markets. Lessons for new investors. Navigating the crypto market requires emotional discipline. Key points to remember include: avoid panic selling. Volatility is an inherent characteristic of the crypto market, and corrections often present buying opportunities. Focus on fundamentals. Investing in assets with real utility minimizes speculative risk. The crypto market offers unprecedented opportunities for generational wealth creation. However, realizing this potential requires patience, strategic planning, and a long-term vision. The cryptocurrency market is gearing up for a pivotal year in 2025, with Bitcoin and altcoins positioned to redefine global finance. While risks remain, the opportunities for savvy investors are unparalleled. By staying informed, diversifying their portfolios, and maintaining emotional resilience, investors can navigate the complexities of this changing landscape and capitalize on its transformative potential. As we approach 2025, several key themes will further shape the trajectory of the cryptocurrency market. Institutional interest in decentralized finance, DeFi, and cross-border payment solutions is likely to drive innovation in both Layer 1 and Layer 2 protocols. The intersection of blockchain technology with artificial intelligence, AI, and the Internet of Things, IoT, is also expected to extend the utility of blockchain beyond financial services, opening up new avenues for adoption. Meanwhile, geopolitical tensions and burgeoning central bank digital currency, CBDC, initiatives could amplify the relevance of decentralized assets like Bitcoin and Ethereum. Investors who strategically balance these emerging trends with fundamental analysis will be best positioned to capitalize on the next wave of opportunities in the market.